Bitcoin prices all over the place this week. So as we come to the end of the week, going into Friday and the weekend, what do we need to be on the lookout for? So one of the big things that's coming up this weekend is, or tomorrow for Friday, is going to be the Fed's talk at Jackson Hole. Jerome Powell is going to give a speech at Jackson Hole. And a lot of people are speculating that he's going to say or indicate that the taper program is going to be put into effect, that the bond purchase is going to be put into effect, and that the taper program is going to begin. So all eyes are on the Fed to see what they are actually going to do. And just the anticipation of that, traditional markets were down a little bit today. Not a whole lot, just a 0.5% across the board, but still a little bit of selling action there today. And what did we see in the cryptocurrency markets? Same thing. It was a red day pretty much across the board with Bitcoin, Ether, and all of the large cap alts. And there were a few that were up. So let's take a look at coin market cap here. Solana had a little bit of a run today, starting to pare back a little bit. Elrond had a little bit of a run. Tezos was on a run, but that's dropping back a little bit as well. So it's kind of interesting. We still have a little bit of a sell-off going on right now. As you can see, the big drops on some of the coins that have been on a run. Cardano especially has been on a run lately. We can jump in here and take a look at Ethereum. And notice the price action. This is on the daily right here. Here's Cardano. Cardano has been on a big run and have a nice little pullback in process there. Somewhat of a retracement going on. How far is that going to come back? We don't know yet. Here's Matic's price action. XLM. Let's see. Here's Solana for today. Solana had a nice big spike and now it's trying to figure itself out. And we'll come back to the hourly and look at that hourly price action. But right now, here's your Fibonacci retracements on Bitcoin. So as we know, Bitcoin's been pulling back a little bit today, 46,009 from yesterday. It popped back up into the 49,000 range again. So what are we doing? We're ranging just like this whole move where from the peak back in April, we've been downtrending. We had a little bit of a drop, well, not a little bit. We had the first initial big drop, pump, major drop, and then it was kind of ranging. And we had these ranges where it was 30 to 40,000 initially, then it dropped down to about 30 to 35, then it popped up 35 to 40, and then we dropped down again where it was ranging in that 30 to 35,000 range. It got a little bit tighter and then ultimately hit that bottom in July of 28,000 before we started reversing the trend. So let's talk about market cycles and trends. And from a global macro scale, from the beginning of time for Bitcoin, it's obviously been in a global macro uptrend. Okay, it started at basically a penny. So of course it's going to be up from there. So for the life of Bitcoin, the trend has been up. We're in an uptrend. Now, in that global macro trend of the life cycle of this asset, we have of the market cycle uptrend in the asset, we have minor macro trends within the overall global cycle. And you can have a downtrend sometimes for a long period of time, even in a uptrending global macro market. So even going back all the way back to 2013, a lot of people are comparing 2013, 2014 to what we're experiencing now with this big drop. A little bit of a pullback, another drop, and then into a bear, year and a half long bear market. And then a lot of people are comparing it to the 2018, 2019 time frame. And some people think that, this is kind of where we're at now before we hit the ultimate peak from 2013, 2014. And again, we have the bull trap and then long-term bear market cycle. So again, even in a uptrending global macro market, you can have a downtrend within the overall cycle of the market. You can have a downtrending range within the overall global cycle. 2017, 2018, a lot of speculation on 2017, 2018 that we are here in this area where we had the little blip, and then before we get another ultimate peak in the market where you have this what looks like a distinctive blow off top, but when you expand it a little bit more, basically you have a spike with a drop, spike, drop, spike, drop, and it works its way down into a more longer sustained bear market. As we go along with a succession of bull traps, it drops, you get these pumps, you get the drop, pump, drop, and they're big drops and big pumps. And then again, a sustained, longer sustained downtrending bear market within the overall global uptrending macro market. So where are we now in Bitcoin? We've been trending up in this previous cycle that we're in right now. We had our initial first pullback on the initial uptrend from the March 2020 lows, and all of the liquidity the Fed's been pumping in the market. That's why so many eyes are on the market, because Bitcoin and cryptocurrencies are risk assets. They are speculative risk assets. Nothing fundamental or store of value about these assets right now in their current life cycle. They're too young, too early, too speculative, and there's too much leverage in the system. And when I say leverage, I don't necessarily mean the retail traders leveraging up, although that is on the rise. I'm talking about leverage on a more global scale from the large investment funds and corporations like a MicroStrategy. If we were not in the current fiscal policy that the Fed has put the risk on trade into, has put companies into by freeing up so much liquidity, companies like MicroStrategy would not be able to borrow money to buy Bitcoin. The only reason they're able to do that is because there's so much liquidity out there, and they know that the Fed is there with the printing press to keep pushing it out. So that's why companies like MicroStrategy could do that. The investment funds are doing it, hedge funds are doing it. So the big companies are levered up. That's what drove a lot of this. A lot of this was retail leverage, and that has to unwind and delever at some point. That's why so many eyes are on the Fed, because based on what the Fed says, we could have a longer sustained deleveraging and deflating of markets across the scale. I'm talking real estate, stocks, pretty much everything. But if the Fed says they're going to keep the pedal to the metal and the foot on the gas, then we're going to see things continue status quo. So in this uptrend, so the Bitcoin market globally has been an uptrend for its entire life cycle. Then you have your 4-year cycles within that, and your one year bull market cycles within the 4-year cycles. The specific real parabolic pumps are typically around that 18-month to 1 year time frame from when they start. You can track this one from March 2020 is where the lows, but really I think you probably started around September, well, not September, but January, February of 2020, before we had the pandemic. March 2020 sell-off, it was already starting to uptrend there, coming off that 2018, 2019 bear market. We started that uptrend back in January, February of 2020 to the ultimate peak of April 2020. So without that March hiccup, there's no telling where we would have been. And without the Fed and the quantitative easing, there's no telling how high we could have gone, because they put the printing press into action. And that fueled a lot of this because it's pushing capital into risk assets. So within that uptrending market, we reversed, and we've been in a downtrend ever since April. So within this overall downtrend of this micro cycle in the macro uptrending market, we've now reversed that trend and we are trending up. Now this is the daily again. And again, how do you spot trends? Higher highs, higher lows, lower highs, lower lows. So we've checked that coming down the mountain. We had a high here, a low here. We had a higher high, higher low, higher high, higher low, all the way across the board until the first red flag, lower low. So this low breached the last low. So lower low was the first red flag. Then we put in that lower high. That was the next red flag. So that indicates there's trouble on the horizon, and you can expect downward continuation once that happens. So when you reverse trend, it's going to be the opposite, where we have this micro low within this little downtrend that we're in right now. We put in a lower high and we put in our first higher low. That's trend reversal. So that's the white flag or the green flag or checkered flag, whatever you want to call it, that we're off to the races. Put in a lower high and we put in a higher low. And in order for trend continuation, what are you looking for? You're looking for higher lows and higher highs within this trend. Higher low, higher high, higher low, higher high, until we finally are reaching a point to where we had just barely nipped that last high. Now we've put in a lower high, red flag. So we put in a lower high on this reversal of trend within the micro cycle of an uptrend of a macro current cycle downtrend, even though the bull market, Bitcoin market from the beginning is an uptrending market. We are in a cycle, a bull market cycle that reversed into a downtrend. And now we've reversed that into an uptrend. So now we have a lower high. That's our first red flag. So where do we look? So as we're coming down, we look left. So as long as we stay above this last higher low here at 44,600, we're in good shape. So this Fibonacci retracement chart that I have on here for retracing this move, our first key level is that 618, which is at that 51,000-ish level. And then you have the 782, which is at the 4,000. So that's your range there, where until you clear that range, you can't really declare bull market back on in complete trend reversal. But as long as you're putting in higher highs and higher lows on the current trend, you're good. We put in a lower high, so that's a red flag. If we come back down here, and if we put in a lower low below this one, then we can look for trend reversal, more continuation to the downside. The question is, how far down does it go? Well, you look left, and there's your next lower low right there. Or your next higher low that you're going to look to probably retrace to that point, about 38,000. A lot of people are calling for that. When you retrace that move, there are resistances and Fibonacci levels that come in and kind of confirm that. And then if you break that level, then you're looking for more continuation down. So the catalyst for a lot of this is going to be that Fed meeting, because this is all liquidity. Everything that's going on right now is a liquidity risk on trend that we are in right now. Tomorrow we have options expiring. We've got the Fed meeting. So Friday could be a big day. The weekend could be a big weekend, depending on what kind of news we get from the Fed and what those options expiries look like. Sometimes the option expiries can make some moves. Sometimes they just get extended out and they're really a non-event and a non-issue altogether. Max pain isn't really max pain like a lot of people think. So let's take a look at something else that's fun that everybody likes to see and a few people have asked about. And again, this isn't something I subscribe to, and this isn't something I study, but it is fun to look at, the moon cycles. So a lot of people get a kick out of this, this moon phase indicator that you can get on here. And it's really funny because they've been kind of your full moons or your pump moons, your new moons or your dump moons. And, there's all kinds of nuances about the time frames and this and that. And you can see that these moves have been kind of tapered a little bit with the moons. We're in a full moon right now. So I don't know when that's going to actually print, because we had our last new moon here. Maybe that's the full moon here that this pump came from. And then obviously our next print is going to be a new moon, which could indicate a downward trend. So it's really interesting to watch these moon cycles and kind of see how they play out. We had this, and for whatever reason, they put the full moons on the bottoms here and the new moons are up top. I didn't change the color of them, but full moons are on the bottom. But this initial pump trend started off of a full moon. Very interesting. And our first initial pullback started on that new moon, just like right here, a little pullback, new moon, full moon pump, pull back, new moon, full moon pump. We're getting ready to print a new moon again. I don't know what date that's going to be, but if we have some downtrend, maybe that's got something to do with it. But anyways, neither here nor there. I just find it really interesting. Again, not something I study or watch or pay a lot of attention to, but it's just really interesting to kind of look at that. Now, something else, we'll go ahead and take this moon phase off. Something else to keep an eye on are the moving averages, and you have your weekly 21 weekly moving average. And if we get on the weekly chart, the key is you want to be above that. So that's another global signal to watch for. It's that 21 weekly moving average. As long as you're above it, you're in good shape. We get below that, then there's some reason to be a little bit more cautious and a little bit more concerned. And then we have the 200-day moving average. Let's put that on the daily. Currently, we are tapping on that. You want to stay above the 200 daily moving average. We're tapping on it. As long as we can reverse trend off of that and bounce, you can look for more continuation to the upside. If we break below that, then we can probably expect more continuation to the downside. How do you know if you're in a bull trap? How do you know if a bull trap is confirmed? It's this moving average. So when you look at that 200-day moving average, and we'll go back and look at the weekly again, and you go back to 2017, 2018, or 2018, 2019, you can see that we broke above the 200-day. We stayed above it the whole bull market cycle. We came down, broke below it, tested a little bit, popped up, tested it, broke down below, came up again, dropped down below it. And that was coronavirus dump times. Here's the 2017, 2018, where same kind of thing, similar market conditions where we're in now. We had the drop, pump, drop below the 200-day, came up above it, dropped below, tested it, and then the downside continuation after that into a longer term bear market. Same thing back here in 2013, 2014, that a lot of people are comparing this market cycle to, either before or after in terms of the peaks. So here's December 2013. So we had the initial drop, a little bit of a rebound, another downside pump down below the 200 moving average, kind of spent some time below it, popped up above it, down below, above it again, bounced around, ultimately dropped below it, and then down into that longer term bear market cycle. 200 weekly, let's get back on the weekly chart and look at the 200 weekly. Same kind of confirmation, starts back in 2013. We dropped down, tested it, dropped below it, and were rejected by it, popped up above for a little bit, and then dropped below, and then that was it. So again, as long as you're above it, you're generally okay. When you drop below it, you're looking for more sustained downward action. 2017, 2018, right here, same thing. There's your weekly. Once we dropped below that 21 weekly moving average, it was kind of downhill from there until we came back after coronavirus dump times. So let's take a look at some hourly price action. And again, we know that these markets are not retail driven, they are institutional driven. And here is the most recent price action that we are in right now, this whole little pump cycle that we've been in that we're kind of currently retracing right now. So there's Bitcoin since July or August 19th to today, with this little pop move that we are currently retracing right now. When Bitcoin was around 44,000, we're kind of in the process of retracing that whole move, and we can expect it to come back down to about 44,000. If it holds, that's a good sign, and it could bounce or it could break below. So that's our next level that we're really looking at. We have this little resistance pocket here that we faced going up, and we're now facing it going down. It could break either way. So that's going to be a big indication. This could just sit here like this until we get some confirmation and clarification tomorrow between options and Jackson Hole. So let's look at the price action. Here's Ethereum, same kind of thing, almost the same types of moves. This is a little different here than Bitcoin. That was the Bitcoin area right there. Ethereum had just a little bit different pattern going on towards the end there, but very similar price action here over the last 24 to 48 hours. Cardano, even with the pump that Cardano had, kind of the same action coming up and over, retracing that move. Matic, same thing, up and over, retracing the move. XLM, I mean, all of the different major cap, large cap altcoins that I'm following, look at XLM and Polkadot. I mean, almost identical. So this is automated algorithmic trading. It's programs based on, that's why your Fibonacci levels and things like that are so important, because they plug those in. If you're rejected off the 618, then do this. If it breaks the 618, do that. So those algorithmic quant trading programs, that's how they do them. They plug in those scenarios for the if then, if this, then that. And it's all based on support levels and resistance levels. And it's all based on those. That's an interesting one there. Cody, very interesting chart. Dogecoin's been, kind of the same thing. So really interesting, very similar price action across the board. with liquidity moving back and forth between Bitcoin and the altcoins on any given day. So until we get real trend confirmation, we don't know what happens. But, and again, remember what this is all about: support and resistance. Support is buyers, resistance is sellers. That's really all it's about. There's a market maker out there that has to provide liquidity to the exchanges. What does that mean? Whenever somebody's selling, there has to be a buyer. Whenever somebody's buying, there's got to be a seller on the other side of that contract. The market maker's job is to provide that transaction liquidity. So the market maker has to buy up all the shorts to sell to all the longs, and has to buy up all the longs to sell to all the shorts. So as we're going up, the market maker is building his short positions to resell and reverse trends so he can provide liquidity. When the market's going down, the market maker is building his long positions to buy up all those positions to provide the liquidity to pump the market so that he can go ahead and reverse trend. Market maker doesn't care if it's up or down. Market maker is trying to provide liquidity, make a profit, and extract as much liquidity and profit from the market as possible. And another thing that's really interesting to look at with the hourly time frame is to retrace this whole move back to where it started for all of the charts on the hourly. So this is the hourly time frame going all the way back to where this began, July 20th. There's Bitcoin, Ethereum, Cardano, Matic, XLM. I mean, it's pretty remarkable how very similar all these charts look. And why am I showing this to you? You know, markets are manipulated. It is what it is. The key is identify the trends and the patterns and ride along with them. That's how you're going to make the money. You invest with the momentum of the cash flow of the trend. So you want to be able to identify the trends. Solana is kind of the outlier there with that giant pump and kind of ranging up top here. But everything else has very similar price action. Internet computer is a little different. IoT is a little different. There's Maker, SNX, XTZ, Cody. Cody's a little different too, I think. Yeah, Cody had that big spike here. And Dogecoin. So pretty much everything, you could have almost just jumped into anything back in July at the lows and then ridden that up with a few exceptions. So all that to say, the key is to identify the trends, identify what the market maker is doing, what the large institutional investors are doing, the news and events that they're watching on, understand that crypto, Bitcoin, cryptocurrencies, all of it, it's risk on trades. There's a lot of excessive liquidity out there. There's a lot of leverage in the system still that has to come back at some point. We have to have a deleveraging at some point. When the Fed starts the taper, raises the interest rates, that's going to change things dramatically. So keep an eye on that for tomorrow, for Friday. Keep an eye on the markets. They're all related. Liquidity is flowing in and out of all the different assets, all the different markets. And of course, keep an eye on the dollar. When the dollar's up, risk is off, and cash is going back into the dollar. When the dollar's down, risk is on, and cash is going back into risk assets. So that's the world that we live in now. And it is highly manipulated, highly correlated. It's a levered up market that at some point needs to land. When is that going to happen? We don't know. How quick is that going to take place? We don't know. And what's the Fed going to do when it happens? Well, they're going to jump back in and start printing again. So that we do know. They're not going to let it crash. They're not going to let it tank, but they are going to let it go down. So what did we just show you at the end? Opportunity. So identify the bottoms or the lower ends of that, and then ride that train up, and then understand where your top is so that you can exit that trade and then wait for it to bottom out again and then ride it back up again over and over and over. So the most successful investors of all time are swing traders like that. They buy in at the bottoms, not the bottom, but they buy at the lower ends of the market after reversals. They sell at the upper end of the market. You don't have to get the exact bottom. You don't have to get the exact top. You just need to understand trend reversals and buy low, sell high. When somebody's buying, that's when you want to be selling. When people are selling, that's when you want to be a buyer. So that's how the greatest investors of all time, the Warren Buffetts, the Paul Tudor Jones, all of the greatest investors of all time have been traders. They have not been hodlers. They are traders. What their goal is, if you want to be a hodler, your goal should be to accumulate more. How do you do that? You sell when the asset's up. You buy when it's at the bottom. Especially with Bitcoin, cryptocurrencies, we've had these cycles. extreme cycles that we've gone through. So the goal should be to try to get out at the, higher end of those cycles and buy more at the bottom. If you're a long-term hodler and believer in the asset, your goal should be to accumulate more. What's the best way to accumulate more? Leverage your assets, not leverage them, but exit your assets, liquefy your assets and compound them, grow your asset base. So that's my take on it. That's what I've done my entire career with the real estate that I invest in, the businesses that I invest in, and then the assets that I invest in other markets, stocks, cryptos. I try to buy near the bottom, sell them somewhere near the top. I'm not greedy. I don't have to get the exact bottom. I don't have to get the exact top, as long as I've got exponential returns on those investments. And then I do it all over again and I increase. For me, my number one asset is cash. So my whole goal is to increase a cash position so I can take advantage of opportunities in the markets. So that's just me. I'm not saying that's right for everybody. I'm just saying, I follow the most successful investors of all time and how they do things and how they trade. And it's pretty interesting. And there's all kinds of different philosophies out there and ways to do it. There is no right way for everyone. Everybody has their own unique strategies and their own unique abilities and their tolerances and things like that. And that's just what I've done for the 30 years of my career as an entrepreneur and an investor. And that's what I continue to do and will do moving into the future.